The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. Well, this is the Commodity Hour, and we're finally getting a lot of volatility in the stock market. We've had just about a 30-point move in the S&P futures. We were down about 14 and up to 16, so we were getting some really good volatility there. The VIX index is actually holding up relatively well, but frankly, who knows where it's going to go from here. We've gone past every major expansion that I can find. The only thing I can see today that looks interesting is the fact that we're having this really good volatility in the market, and that's what I think is what we really need to do to get more players in. We've had virtually no volume on this run-up. I'd like to start the show out today by looking at December corn, also known as Christmas corn. We looked at that a few weeks back at the 61% retracement, put our stop in. That stop was triggered. We took a loss on that of 10 cents, which is $500. We went into the farming business with the full extent of thinking the market was going to hold at the 618, and of course it didn't. And that's why, being a farmer in the commodities markets, you can get out anytime you want in a moment's notice, which is the best part of it. The farmer does not have that option because he has seed, he has bank loans, he has land, he's got a lot of things that make it look like it's going to be a lot different than if it's going to be, the regular way. So this is the main thing that you have to look at when you're watching these things, is to put your stop in and not worry about it at all, because you can't worry about it. You don't know which trades are going to win and which trades are going to lose. That's something that you never know. Now, the thing that we need to look at, the corn completely collapsed. I wanted to show you the wheat also, because wheat has been under a great deal of pressure also, and it keeps dropping and dropping. We alluded to that fact the last time we looked at wheat, and if you'll give me 1 second, I'll put it up here. You'll see that the wheat continues to drop, and it tells us that's pretty much what we're looking at. Someone asked the question, do I just buy the NASDAQ here? They asked if they could buy the NASDAQ. Folks, I don't buy breakouts. And, this market's up 13 days in a row. The odds of that going 15 or 16 is even, is just very unusual. So if you want to buy it, you just have to decide how much you're going to risk. That's basically the bottom line. So if you want to buy it, you certainly can do that without any trouble at all. My cell phone is going nuts. Unfortunately, I don't know how to turn it off. I turned it off. I don't know if that's going to make any difference or not, so we'll wait and see. However, we're having weakness all across the grain markets. Evidently, they did not like what Commander Draghi had to say with his speech today. By the way, the checks that we talked about have been set out. We'll see if that's going to make everybody happy in here, but we'll have to just watch it. Okay, now one of the markets that I'm watching real closely for a potential turn is the oil market. I know Andy has some really positive things looking at the oil market, and I wanted to just to show you the price symmetry that we're looking at here in the heating oil, because this is a contra-seasonal trade. We're getting ready for it because it gets really strong into the fall, so you want to start buying it into the summer. But if you look at this, you'll see that you have an ABCD pattern forming. We took out the lows of April by just a tiny little bit yesterday and a tiny little bit today, and it had a really good reversal. And what's interesting is the time frame down from the time in the middle of April to early May is exactly equal to the time from the middle of May to where we are in June right now. In other words, that AB equals CD move was absolutely perfectly symmetrical. And so if you count the number of days down from the high in April to the low in May, it's exactly equal to the number of days down from the high on May 19th to where we are today, which is, by the way, this is D-Day. This is when our troops went on the beaches of Normandy, on Omaha Beach. I happen to have two uncles that were on those boats. Both of them lived through it, and my other uncle, one of the two uncles, went on to fight at Guadalcanal and was at Mount Suribachi when they raised the flag. He wasn't in the picture, but he was standing around watching, so we'll see what happens. Anyway, that's just old history stuff. But anyway, this heating oil looks like it's got a real chance of moving to the upside here. The first objective here would be about 10 or 12 cents. So that's something that we'll be watching here on the commodity show here, because next thing we'll take a look at is the crude oil, because we've had a really good retracement in the crude oil. We came down today, and now we're starting to have a little bit of a move to the upside. Give me 1 second, and I will try to get this, because we stopped right at the 50% retracement of this last move, which is really good from a technical point of view. And hold on a second, and I'll get this up here. There we go. And as you can see, we came. I'd like to see it get down to par, which is $101 per barrel. We got to 101.60 today. We've had a little bit of a move. I'm still thinking that we've got a chance to get it down to the 101 level. But the heating oil, which is part of the crude oil, is telling us that it might not make it, just because the heating oil has reversed so quickly from that double bottom pattern. It looks very, very interesting just from that perspective. But we've had three lower tops now in crude oil going back the last several months, and if we ever get above the 104 level on a closing basis, folks, this crude oil could really go. It's got a real chance to make a pretty significant move. I want to put up the long-term weekly chart here in crude oil, and you'll see that it's had a high-level consolidation here for quite some time now. We've been holding up really good. We've been in a really tight triangle, and if we ever break out of this triangle, I really think either way that we come out of this triangle, we could have a move that would tell us that we're going to go either a great deal higher or a great deal lower. So that's it. By the way, excuse me, I meant to say this. Today's Jim Twentyman's birthday, my good buddy from 50 years ago. We've been trading together, and his birthday is always the day before D-Day, and so D-Day is tomorrow, the 6th. I apologize to all of those that had loved ones that went through that, but D-Day is actually tomorrow. I always get confused because Twentyman always reminds me that it's the day before D-Day. And when I talked to him today, I totally forgot. So anyway, that's neither here nor there. But anyway, the crude oil has this really strong triangle that it's been in for well over a year now. We've had lower tops all along, some really nice ABCD patterns in it. And right now we're at a cusp where we need to get above that 104 level. And if we do that, we've got a really good chance of doing it. Considering that oil has held up so well, given the fact that the tensions we've had in the world, they didn't really cause oil to move very much, and they didn't cause it to move down very much. The rumor is that that they were going to push the price, whoever they were going to put the price of oil down just so that it would hurt the Russian economy and Putin. But that certainly didn't happen. That occurred several months ago, and crude oil has been in a steady rise ever since it went down and made the 61% retracement down at that $96 per barrel level. So that's telling you that it still has a chance, to move more to the upside. That's my assessment of what I see happening right now. Now I'm going to switch over to soybeans now, because we've have the same situation going on in soybeans that we've had in corn and also in wheat. We've had a market that is. Hold on, just give me 1 second here, and I'll get the. I made a bad mistake here. Just give me a second here. My mistake was I pressed the wrong button. I tell you, when you're not into these things big time with this computer stuff, I'll tell you, it really makes you a little bit suspect when you're trying to put these things into the tiger room. So we'll see. Okay, here are this is the soybean contract. This is July beans, the ones that were harvested last year. As you can see, we made a big butterfly top up there on the 19th. Mr. Z from the den was yelling and screaming about that time, and he spot on caught that one. It was a beautiful butterfly up there. at the $15.35 per bushel area, and we're now 70 cents a bushel under that, heading for another 20 cents, it looks like, down to the 786 if it's going to hold that level. So we'll have to, to look at this next week when we're on the air to see if the beans are going to hold the 1450 level. When I first started trading beans, folks, they hardly ever got out of a range between $3 a bushel and $4.50 a bushel, except for 1972 when we had the Russian grain robbery, and that's when the Russians were buying everything, and beans got to $12.99. And now, beans have been as high as $17 a few years ago. And this, like I've said many times on this show, beans have a situation where they really have an inelastic demand. In other words, no matter what the price of beans are, they're going to be used. So they could be at $20 or $25 a bushel. They're going to be used. They're used in feed, soybean oil, paint, margarine. I mean, it's used in so much stuff. It's just, it's really amazing. So there's always going to be something for, soybeans to be consumed, that's for sure. The question is, as at what level? Now, we're assuming that the beans are going to be in a much better supply than what we have in the, I'm going to post this long-term chart on beans because it's really a beautiful pattern. This is the same type of pattern that we're seeing in the Dow Jones. However, the Dow Jones never got the memo that they were supposed to go to the downside. But give me 1 second here, and you'll see where we are with the soybeans on the long-term weekly basis. We are actually holding up here, and I believe we could drop a couple dollars a bushel without any trouble from this level, from the long-term level. But we made a high back at around $18 a bushel back in 2012, and then we came down to a 786 in 2013. And we rallied up to a 61% retracement in 2014. So we've, in effect, made a head and shoulders pattern in this long-term weekly bean chart, which would tell us that we could be looking at a serious top. And corn and wheat are telling us that the crops are going to be very, very good this year. However, this is just June, folks, and we're going to have one or two scares every year. We always have one or two scares in our commodity markets without any trouble at all. I mean, so you've got to. You got to keep that in mind, that that's something that happens every year. We get a weather market scare one or two times minimum, and so you want to be able to take advantage of those when they come in. The trouble is you don't know when the hot weather is coming in because the weatherman can only predict about 3 or 4 days in advance, and even then, he has about the same track record as I do. You're only right about 50% of the time, so you got to be able to realize that you've got to look at technical analysis to try to tell you where you are. The thing I wanted to mention was that, Basil's been talking about that VIX index, and folks, that's the thing to watch because there's no fear in this market. I mean, we're going to take a break here. The Dow's up 100. The rest of the market's catching up.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, Visit the front page of TFNN.com.
Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, folks, we're going to switch our focus on the commodity hour over to the metals right now. We've been looking for gold to come down to around the 1225, 1226 per ounce level. That's the 786 retracement. As you can see, this triangle that we posted into the Tiger TV is the one that we were watching last week, and we knew once we broke the 1280 level that we were probably going to drop quite a bit. We dropped over $40 per ounce. Today we went down and matched the same low that we made on Tuesday, and then the market had a $17 reversal, but frankly that doesn't really mean very much from this level because the trend is so strong down that it looks like we're still going down to the level of 1226. We'll be watching it very, very closely here, but that's something that really is on our radar, the fact that that's going to happen. I know the question that comes into my mind, I know that Europe has done everything that they can now to assure that there's going to be plenty of money everywhere. What I don't understand is what they see that scares them that much. I don't know. I guess I'm looking at it the wrong way. But we'll see, what happens. These central banks are managing recessions, and I don't know if that's going to be the right thing to do or not, but we'll have to just keep in mind that when they usually do things like this, this is something that they can get in trouble about. I've had a request to take a look at the long-term weekly chart on gold, and we'll do that right now. And as you can see, we came down and hit the 61% retracement back in December of 2013. We then had a $200 per ounce rally that stopped right at the 786 up around the 1390 level. Now we've come down $150 per bushel, per ounce. And if we can get it around the 1266 level, I'll certainly be interested in a potential buy here in the gold from a long-term perspective. The commodity markets are under a great deal of pressure right now, with the exception of the cattle, hogs. They've still held up at really high levels. But corn, wheat, beans, all the growing stuff is under, the armies are surrounded by, the circles, or the wagons around the campfire are surrounded. That's basically it. The bears are in control, and until we get some type of a weather scare, it looks like these grains are going, to go substantially lower. Okay, now if we're going to take a look at the commodities with the metals, I want to take a look at silver also, because I think silver has a chance to dip under the $18 per ounce level. We've got some nice patterns that tell us that we could get down to right around $18.20 per ounce. That's about 80 cents from where we are right now, and that's what I think we could do. The number that I'm looking at in gold is $1,226 per ounce. Basically what that is the 786 retracement of the low we made last year at 1174. We rallied up to 1390, I believe, and right around 1393 per ounce, and then the 786 retracement of that comes in at the 1226 level. The 618 held for quite a while, and then it gave up, so we think that it's going to go down to the 786. That's our alternative. We could get a nice rally here in gold, but I think it would just set up another swing that would take us to the downside, towards that level that we're looking at. Now, when we take a look at silver on the long-term chart, if we go to the weekly, you'll see that we have a really big pattern that occurs down around the $18.20 per. Excuse me, just give me 1 second here. I've got to get this chart hooked up, otherwise you're going to be seeing my desktop with the pictures of my grandsons. And even though it is better than any of the charts I've ever posted, I don't think you'd be interested. Okay, now we can take a look at silver here, and as you can see on this long-term weekly chart from 2009 to where we are now, is that we have several patterns that are coming together around the $18.10 per ounce level in the silver. So I think that would be a good thing to look at. So we'll be watching it. We have to give it a little bit of time, of course, because this is just the first day up in a long time that we're having, and it's really a little bit early to make any type of assessment on the gold and silver. This is just the first bounce off of it. We're having pretty good reaction in the metal, not in the metals, but in the reaction that we're having in the currency markets is pretty distinct here, because we've had the euro drop below the 136 level. It went all the way down to 135 and then reversed, because there's a lot of area around between that 135.70 level. So we got to take a break here. We got the Dow up 100 points, the S&P up 11. Things are looking good.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, folks, we were talking about gold and silver here, and what we did was we showed the long-term weeklies on gold and the long-term weeklies on silver. Now, I've also posted into Tiger TV the gold and silver index, the XAU. And as you can see, we've dropped a little below the 786 of the last move, and now we've reversed to the upside on that. Whether that's, the fact that all stocks are going up today because the Dow's up over 100 points and, the NASDAQ is up about 30. So that could be related to what that is, or it could be something just totally, different. You have to wait on that. I don't trade that index very often at all, but if the gold is going to be good, it will start to, raise its head from here and begin to show that it's going to be pretty strong. Right now, gold is only up $10 and silver's up about 26 cents. So it's really nothing yet, but it could be the start of something pretty good if that's going to be the case. But you have to be a little more patient from this level, and we'll see if that's going to, turn around and, it will start to move. Now, I wanted to go in and talk about the bonds right now, because we're having some really good moves to the downside, and then we reversed a little bit in bonds. And I wanted to show you this because we came down and we've matched last week's low. Actually, the last 2 weeks' low, we came down and touched it, and now we're starting to rally back. However, I believe that we've made a major three-drive to a top pattern in the bond market. We said that up around the 138 level. It dropped all the way down, dropped just about 4 points down to the, it did drop 4 points down to the low today, and that tells us that, this market has been down 6 days, so it's very, very overbought. Let's try oversold. That'll probably be the better thing to look at. It was very oversold, so we're starting to get the rally back. If you look at this on a shorter-term basis, what I'm going to do here is to put up the chart on the 1-hour chart so you can see some of the little patterns that form on the hourly chart in bonds. And believe me, bonds are really a good thing to trade, folks. If you're having trouble trading the S&P or the DAX or the Dow Jones, I'd highly recommend you take a look at the bond market because it's much larger than those markets. And what it'll do, even though it doesn't have the same volatility, it offers some really nice profit projections here. As you can see on this hourly chart, we were making a 3-drive to a bottom pattern down there at this 134.20 level. We got down as low as 134.15, and that 5 points is equivalent to $150. Well, after that occurred, the market rallied $1,000. Now, you might not have gotten all of it, but you might have got some of it, and that's a pretty good thing to really look at. Longer term, we posted the daily chart of these bonds. They still look bearish. We're down 8 days from the high, and so we would assume that you'd get a pretty good rally that would bring us up to at least the 382 of the last high that we made at 138.12, and that number would come in around the 136.03 level, about another $600 or $700 from where we are right now. Now, if we move to the note market, which is the largest of all the interest rate markets, this is the one that determines our, credit cards, auto loans, and all that stuff. You'll see that here again, we had a pretty good sell-off here since the last few weeks. High was made. We made a beautiful ABCD there. If you'll give me 1 second, I'll draw this in. I put this in last week, but for some reason it didn't save itself. But it only takes me a second to put it in right now. There we go. And then today's low that we had was a 61% retracement of the low that we made back in April. So we've had some higher bottoms in here. We were very oversold in the market, so we should get some type of a bounce here, looking at that, and then we would have a pretty good idea of where we are right now. Someone asked a question about resistance in the Dow numbers. Folks, this thing has gone past every target that I can find. It doesn't make any difference whether I'm looking at the transportations, the NASDAQ, the Dow, the S&P. It's gone above everything, and you can't fight that. You just have to wait and see. The good thing today is the fact that you're having good volatility. You had a 100-point move down in the Dow Jones. First of all, you had a 100-point move up before, then you had a 100-point move down and another 100-point move up. So this thing has actually had almost 300 points in the overnight market in the Dow Jones, starting at about 2 o'clock in the morning New York time. So that's really good volatility. That's the kind of stuff that we really need, to get this market to go, either straight up or both ways, either one. That's the kind of stuff that you want. This thing has gone nowhere for such a long time that basically you just can't stand in front of it. You just have to wait and see that that's what's going to happen with it. So the good news is that we're starting to see really good volatility today, and I think that's very important for us to, keep in mind, because we still have, 3 hours of trading to go, and, if it goes up for 3 hours, it can go down for 3 hours. I'm not saying it's going to do that, but this is the kind of volatility that you like to see. The VIX is actually holding up relatively well, given the fact that, the Dow's up another 105 points, and there's no sellers in sight. So just keep in mind that nothing goes up forever. This is our 13th day in a row that we've been up, either a higher high or a higher low. So it's been a one-way Corrigan for the last couple of weeks. Like I mentioned yesterday, I have nothing astrological in my playbook that tells me that today's going to be the high, and I just have to wait and see to some type of a reversal pattern. I thought today, after the market made the high and then had a big break, and the S&P broke like 15 points, and then it's rallied 17 points. So we've had a 32-point swing in the S&P. That's the first time we've had one of those in a very long time. So we have to watch it closely to see how it's going to, rectify itself for today. So that's what I'm looking at. I don't have anything as far as a place to take a look at it. The New York Stock Exchange Index is now at a 1.618 expansion of the last move also. The Dow Jones has exceeded that, so you just have to wait and see and respect these numbers. I agree with what Basil had to say, and that is the fact that you have to be able to put your faith in the VIX index, and when the VIX finally starts to perk its head up and we start to see some fear, then you'll see a little correction in the market. How much of a correction and whether this will be the top of tops, I don't know. But this is how markets end, folks. They don't end quietly. If you remember 2009 on March 5th, how we were just around the door, right around the corner from the end of the world, and that turned out to be the best buying opportunity for the past 4 or 5 decades. So just keep your powder dry. It'll give you plenty of places to get in when you're ready to get to that point. Okay, now we're going to switch gears just a little bit here. We talked about the interest rates, and if you'll give me 1 second here, I have to get give me 1 second. I've got to pull the chart. I wanted to go to the euro because I wanted to show you where we were with the euro. We had so much stuff happening today. It did exactly what we wanted it to, right into the report. If you'll give me 1 second, I will move this over. And hold on just a second here. I have to change the, this thing had been down for well over 20 days, but the cycle came in pretty much what we were hoping to do, and that's just nothing more than a nominal cycle. In other words, a cycle that occurs every 42 days or every 84 days. That's all it is. It's just from low to low and low to low. That's all it is. It repeats usually twice or 3 times, and then it expands or contracts and becomes very, very unusual. The good news is today that we've had a move in the euro that has gone all the way from on the downside to 135 on the downside, and we've gone all the way up to 136.50. So we've got this really big volatility, working in this. So that's pretty good. Okay, we got a call from Bob in Connecticut. Can I help you?
Yes, Larry. Good to hear from you. I enjoy your program always.
Thank you.
I had 2 quick questions. One, with the VIX and overall volume in the market for the last couple of months. My opinion, and I'm interested in your opinion, but my opinion on the VIX is it's really a rather poor indicator about what's going on in the market, but a lot of people pay a lot of attention to it. What I like, and I think it's a better measure, is the Fear and Greed Index that's put on by CNN Money website. And it has 10 different measurements of fear and greed in the stock market and markets overall. And right now, it is at extreme greed at a point of 77. I use it as a kind of an inverse indicator. So when it's extreme greed, I'm a seller and I try to get into cash. And when there's a lot of fear in the market at the other extreme, that's a buy signal for me to kind of buy the dip.
Well, I have not seen that before, but you just described pretty much what the VIX tries to do. If your Fear and Greed Index does better for you, then that's the one that you have to use. Now, I've been watching the VIX for many years, and I've usually when it looks like it's never going to work again is when it really starts to work. So my position is long the VIX. It's pretty much right where I paid it for it earlier on Tuesday. So I'm just staying with it. I've got to stop in, and if it turns, fine. If it doesn't, I'll look at something else. But I agree with you. If you find something that has that fear and greed factor in it, then watch that, because that's how the markets go up. That's the only thing that makes the markets go up is fear and greed. Sometimes they don't do it the way we want it, but that's pretty much what we're looking at anyway. Now, you also had a question about silver?
I did. It's more of a general question. Why is silver kind of a poor cousin to gold? And, most of the press that I read, they'll have 5 paragraphs on gold and 3 sentences about silver. And you can't even have a conversation just about silver all by itself without bringing gold into it. It seems like a very kind of distant cousin that doesn't really get the respect that it should.
Yes.
And silver, what I think is silver is used a lot more in manufacturing, and it's a better indicator of what's going on in the economy than gold is. I'm not sure.
Oh, no question. It's an industrial metal. It really is.
Yeah. So, I would think copper and silver would be a better gauge of economic activity and manufacturing process in particular. And but somehow gold seems to suck all the oxygen out of the room and get all the headlines and all the attention.
Well, gold has that mystical allure. Believe me, it really does. You can think of what happened with Archimedes when he was in his bathtub learning how to find out how to measure volume, and he had the gold that he was trying to figure out the weight of the gold. And I think that probably started it all. But when you look at gold coins and you look at silver coins, believe me, when you have a gold coin in your hand and you look at it, and then you have that same type of coin in silver, even though the silver coin has a beautiful luster to it, the gold just literally is hands down the most beautiful of all the coins, and I think that's why the precious metals, make it so important. We didn't start trading gold until 73 or 74. Nixon took us off the gold standard in 72, and I believe the CME it was actually the COMEX, and then the CME later first started trading gold back in those days, and it was an immediate success. And, we've seen gold go from 260, all the way to 800, and then 800 all the way back to 260 again, and then up to 1900. So there always seems to be something going on, with the gold, and that there's always a market for it, and there's always a story behind the gold, too.
Well, that's all I have, but,
okay.
Keep up the good work, and I really enjoy your show. It would be so kind if you could drop me a little link on what that fear and greed index is so I could look at it. I liked your description of it. If you just drop it to larrypesavento@gmail.com, I would certainly appreciate that. And, that's something that I would like to I'd like to take a look at. Yes, it's a broader measure. They take in junk bonds. They also measure safe haven, put calls, stock breadth and strength. It's a broader measure than just the VIX. So I think just to get a pulse on the psychology really of the crowd.
All right, thank you for calling in. I really appreciate it.
Okay, bye-bye.
Okay, what I'm going to do now is I've had a request to take another look at the gold market. We'll just pull this chart up again, and we'll put it back into the Tiger TV so they can take a look at it. And give me 1 second here. I'm always afraid of pressing the wrong button. We'll see what happens. Okay, this is the same chart we were looking at before. Someone asked the question of, the fact that it went below the 61% retracement. It looked like it was going to the 786. Do I know if it's going to make it to the 786? The answer to that is an unqualified no, I don't know, but neither does anybody else. Now, the way I'll handle this is if this market can, remain its strength here today and tomorrow and get above the 61% retracement, which is up around 1260, which is only about $7 from where we are now, that could be the first indication that all that happened was the market went below the 61 for a short period of time, and then we'll do it. We've got to take a break here with the Dow up 95 and the S&P up 11.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
Okay, we're back, folks, and I posted into Tiger TV the chart of the VIX index, and as you can see, we've completed the ABCD butterfly pattern down at this level. We made the low on Monday. We're reacting quite a bit. I actually bought this at 11.51. On Tuesday, and I'm only risking a $0.50 on this. If we get below 11, then I will, which we probably will, I will go to the whipping shed and wait for the next move. But believe me, long-term, folks, the VIX index has been a pretty good indicator of fear and greed in the market. So whether it's going to be a turn here today or the next day, I'm not sure. We have completed so many of these patterns, and the fact that we're going above them today on some of these things really doesn't surprise me. What's good is the fact that we're having some really good moves here in some of these things, at least good volatility. We had such a good volatile move in the S&P and also in the Dow Jones. The Dow was up 60, down 100, and then up 100. So it's really had a well over a 300-point move in the Dow today. So that's a really big thing, to look at. Now, the last chart that I wanted to talk about here, I'll bring it up again because it's the long-term chart, and this is the New York Stock Exchange chart. And as you can see, we've got a lot of patterns that are up here. We've already gone above the double top from 2007, and we're completing these swings as we go through one after another. But frankly, I don't have any longer-term targets on this other than where we are right now at 10,840. That was about the last thing that I could see looking at it. The thing, if I had anything astrological at all, like a full moon or a new moon or some type of a conjunction or opposition of some power, I would certainly look to probably, institute a short position today in this, right around these levels, and then not risk more than 0.5%. But frankly, I don't have that, so I have to wait and see to let the market tell me that it wants to turn. The best thing that's happening today is the fact that we're having really good volatility down and up in the stock market. We started higher, went substantially lower, and then we went higher. So we've had a well over 33-point move in the stock indexes, and that's what you need to do to get people involved, either from the long side or the short side. And whether they come in from this level or not, I'm not sure. All I do know is that we're getting pretty close to a spot where the VIX index is going to pop its head up and say, okay, look at me, Mom and Dad, I'm still here to play. And whether that's going to be the case or not, we'll have to just give it a little bit of time to see if that's going to happen. But that's what we're looking at right now. We've got the Dow Jones. It's still very strong. It's up just under 100 points, looking pretty good. NASDAQ is up about 20, actually up about 30. The S&P's up 12. The bonds have actually come back a little bit and held up. We've had a pretty good move in gold today, but the platinum didn't do very much at all. It's only up $3. And the copper has, done virtually nothing. It had a pretty good rally a few weeks ago, up to $3.20 a pound, and it gave 14 cents of that back, very, very quickly. So these are the things that we're keeping in mind on. One question that someone has brought to my attention is about the corn. Why didn't it work? Folks, I have no idea. We went into the farming business to see if we could do this. We risked $500. It didn't work, so we're out of the farming business. The poor farmer, he has to sit and watch these crops go lower and lower unless he hedged his crop. In other words, sold it ahead of time at, say, $5.30 a bushel and locked in that price. He's basically looking at a lower price of his product, every day that he's doing. That's why trading is so much easier than being a farmer. You have the same characteristics, but that's pretty much, what you're looking at as far as getting able to get a look at it. Live every day in an attitude of gratitude, folks, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.